Hello and thank you for joining us here on the floor of the NYSE for this week's MacDesk Floor Report. I'm Rebecca Darst from the Market Access Center, right under the Bell podium here on the most famous trading floor in the universe. And today is Thursday, July 5th. We're down about 12 points in the Dow at present. We're off the lows, but that's not quite the move that many market watchers were expecting, given the abundance of global central bank activity and U.S. data points out before the bell. When we got to the floor this morning, futures were flat to higher, gaining a modest bid after a busy pre-market. China's central bank, the PBOC, and then the European Central Bank cut their benchmark lending rates, the ECB cutting its rate by 25 basis points from 1% to 0.75%. That's the first cut below 1% since the onset of the crisis. Then the Bank of England resumed its quantitative easing program in response to a recent cool down in inflation and soft manufacturing data. While you might be forgiven for assuming a risk-on response coming out of the market, traders had largely been expecting the ECB cut and were less surprised by the action than the timing out of the PBOC. Instead, they focused on comments from ECB President Mario Draghi, who said this morning that some downside risk to the euro area economic outlook had materialized. Draghi's tone on the state of the Eurozone economy was quite dour, even as he held back from announcing any more steps to limit borrowing costs for Italy and Spain. This was particularly resonant today against the backdrop of a Spanish bond auction that sent yields a bit higher. We've seen weakness in European financials across the board today, and the euro fell to a new 5-week low earlier. On these shores, we had some decent jobs data out before the bell. Initial jobless claims dropping 14,000 for the week ending June 30th, while the ADP number for the month of June was released, showing 176,000 new payrolls added last month. This was better than the market was expecting, although the reaction was muted given the predominance of the global macro headlines. That said, today's jobs numbers are certainly going to set up expectations for tomorrow's non-farm payrolls report. Elsewhere on the data front, the June ISM non-manufacturing index fell more than expected from a reading of 53.7 in May to 52.1 in June due to a shortfall in new order levels and a drop in order backlogs. This drove the market to its lows of the day. We also had a slew of June same-store sales numbers out from a number of retailers. 20 companies reported comps for June, 14 of them missed. Overall, comps were up just 0.3%, where street estimates were looking for a net gain closer to 1%. This was the weakest series of same-store sales since August 2009, although apparel, and especially specialty apparel rather, beat street estimates. Discount retailers, department stores, teen retailers, drug stores all fell short of estimates. So with equities trading on, modestly lower on fairly weak volume in this holiday week, VIX is up 4.5% at 1740. Option traders today have been targeting S&P weekly puts. Now remember, the last time we saw heavy activity like that, there was a disappointing jobs number moving the market. So that's the number to watch for tomorrow. For now, that's it for me, Rebecca Darst, for the MacDesk Floor Report.